I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Slack is going public through a direct listing, and a slew of new details are out in its S-1 filing. Why the company is taking this non-traditional route. Plus, Intel stock tumbles after the chipmaker cut its full-year revenue outlook. The latest sign, the 2019 rebound in semiconductor stocks may be over. We're going to hear from CEO Bob Swan. And Amazon is attempting to narrow its delivery window to just 1 day for Prime members. Morgan Stanley says this will turn Amazon into essentially a logistics giant, forcing FedEx and UPS to catch up in the delivery arms race. But first to our top story, and that is Slack going public. Only it is foregoing the traditional IPO route in favor of a direct listing. We now know that it plans to list on the New York Stock Exchange under the symbol SK, but more importantly, we now have a better look at the company's financials. Revenue nearly doubled to $401 million, and losses are stabilizing, but the company still isn't profitable. Losses that same year totaled $139 million. To tell us more, we've got our Bloomberg Deals reporter, Olivia Zaleski, and our venture capital reporter, Ellen Hewitt. So, Ellen, you've been covering Slack for a long time now. What surprised you in this IPO filing?
Well, it was a great chance to get a look at how losses have stayed about the same, as you said, while revenues are going up. But I think people are still curious, why is Slack losing money? And one of the interesting things that came out of the filing was their AWS bill, which is huge. It's something like $50 million a year minimum commitment for the next 5 years. So I think people are taking a look at where is Slack going to be getting more revenue in the future? Is that from its existing big enterprise customers? That seems to be their plan. And then what are they doing in order to try to get expenses in line and trying to flip to something that could maybe be profitable someday soon?
Now, Olivia, by going the non-traditional route, they're not going to have a typical roadshow, right? So they're not going to be selling themselves to potential investors.
Right. So there's no roadshow in a direct listing, and there are no underwriters. They're not leaning on the banks to buy shares first and then sell those shares. What they're basically going to do is decide on a price, and they'll confirm that the morning of the listing, and then they open at that price, and they allow the shares to exchange freely. And this is popular. Direct listing makes a lot of sense for Slack because they have a lot of cash on the books. They don't need to raise more capital, but they do want to create a liquidity event for their employees and early shareholders.
Now, Slack has always, at least as far as we've known, in terms of their plans to go public, been planning a direct listing. Ellen, tell us why Stuart Butterfield wants to do it this way.
Well, I can't read Stuart's mind, but we do have a little bit of a guess about this. I mean, like Olivia said, Slack has a lot of cash on hand, something like close to $850 million, according to the filing. So there's less of a need to raise more, and as a direct listing, you don't dilute yourself when you go public, and so that's an advantage. And if we were to read the tea leaves based on Slack's personality as a company, you might be able to guess that they're choosing this because it feels a little bit more fair. You're giving mom and pop investors the same types of opportunities as big investors to get access to the stock early on, and it just, there's not the lockup period for employees.
Right, so employees can sell right away. So
right.
It's a more perhaps a more democratic way.
Yeah, and to add to that, I mean, when you do a traditional IPO, often the banks will favor sort of like the big institutional investors. And so a direct listing really allows them to create a pure and even playing field for all investors.
So why don't more companies do it this way?
Because they don't have the cash.
Yeah, they don't have the cash, and you need name recognition because, like we talked about, you're not doing the roadshow. And Slack, I consider kind of on the edge of a company that's well known. I think it's very well known in San Francisco, and in we use it at Bloomberg for customers, but I'm not sure that it has the widespread knowledge like Spotify did, which was the big direct listing last year.
Or even Uber. And, I've got this chart here in my Bloomberg, which shows IPOs rebounding in 2019. This is showing the value of IPOs in the United States just in the first quarter. Olivia, how are investors receiving the idea of Slack doing a direct listing? Are they excited about it?
I think they're excited. I mean, obviously, we're already seeing some trading happening. They had to open their shares to trade, just secondary shares trading to do price discovery, and we're seeing that come in at the highest at about $26, which is pretty good.
So let's talk a little bit about Uber, because we got more information about where they're pricing their IPO. It's a little lower than some had thought. and perhaps more in line with where we see Lyft trading right now.
Right, it's quite conservative. They're at $44 to $50 a share.
Which means that they would be targeting like
about an $84 billion
valuation at the high end. But is this a bad sign?
No, I don't think it's a bad sign. I mean, originally bankers were pitching them on $120 billion because they obviously wanted the business. But I think $84 billion is a very high valuation for Uber.
Ellen, how does Slack fit into this picture?
I think Slack is just going to be one of a crop of companies coming out, and people are probably going to want to pay attention to how it performs as compared to other SaaS IPOs. I think we'll have to see whether the direct listing does well and achieves the thing that Slack wants it to, which is, I think, a smooth transition from being private to giving some liquidity to their shareholders and employees. Spotify did really well last year, and in talks, Slack talked a lot about how Spotify was a model, although interestingly, Spotify is not mentioned at all in the filing. So I think they're just hoping that the same process that happened with Spotify, which was a pretty smooth process of going public, will happen with their stock as well.
So Uber goes on the road next week, presumably. Talk about the next few weeks for the deal team between Uber and Slack.
Yeah, so Uber goes on the road. I mean, again, they're coming out with this conservative mindset. I think that makes a lot of sense. Their growth has slowed a little bit, and DoorDash is actually really growing, and investors have taken note of that, and they're thinking about that as they try to value Uber Eats, which is an integral business for Uber to sell itself on. So I think we're going to continue to see them having a conservative approach. I think we should definitely expect they will raise their price range. That will certainly happen, and then they'll come out slightly above where they raise the price range to.
But interesting, though, Pinterest also took the conservative route, and we've seen Pinterest shares
and it worked out very well
every day, which is what a company wants to see. Okay, Bloomberg's Olivia Zaleski and Ellen Hewitt, thank you both. I know you're going to be very busy over the next days and weeks. Thank you. We should note that Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Slack. Coming up, Tesla continues to lose its bulls. We'll talk to the analyst who called the latest earnings report a total debacle next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. It's been a long week for Tesla. Analysts expected the electric car maker to post a first quarter loss, but not as big as the one it actually reported. The car maker lost almost $500 million as a record drop in deliveries and its largest ever debt payment drained cash to the lowest level in 3 years. CEO Elon Musk told investors losses would narrow in the second quarter and Tesla would return to profit in the third. One analyst described the report to be, quote, one of the top debacles ever seen in 20 years of covering tech stocks on the street. That analyst joins us now, Dan Ives of Wedbush. Also with us, Bloomberg's Dana Hull, who, of course, covers Tesla and also is on this roller coaster every day. So, Dan, you never mince words, but the top debacle, one of the top debacles ever?
Yeah, I mean, in my opinion, look, in 20 years of covering tech, if you looked up disaster in the dictionary, you'd see Tesla's quarter from this week. And it's not just about the quarter. It's about guidance and the company not fessing up to where ultimately I think delivery numbers end up. And I think right now they could focus on robo-taxis and other fictional novels. Investors are focused on the cash and the demand. And I think the company did probably one of the worst jobs possible at calming that storm down.
Dana, what are other analysts saying?
The same. I mean, and look at what has happened to the. I mean, this was a crazy week where Elon has an autonomy day on Monday, earnings reports Wednesday, and Thursday and Friday you've seen a huge sell-off. I mean, the stock is now at a lower point than it's been since, I believe, January 2017. So big holders seem to be selling, and they've done nothing to sort of calm concerns about what the steady state of demand really is.
Meantime, Dan, you said Musk and co. appeared as if they were in an episode out of the Twilight Zone. What do you mean by that?
Look, I mean, it really seemed that they were not in reality in talking about demand and in talking about what's currently happening. It almost felt like a company where there's a fire happening, but yet they're focused on cream cheese on the bagel, not focused on the core demand. And that's the issue for investors. I could tell you, 48 hours of talking to investors, it's as nervous as I've seen investors in this name in many years. Because remember, as Dana knows as well as anyone, it comes down to the cash. What does that burn look like? And do they have to raise capital? Right now, I think the writing is on the wall. They have to raise capital. And the question is, can they raise capital and what the structure looks like?
Let's talk about what I'm assuming you mean by the cream cheese on the bagel. You also said in your note, we continue to feel robo-taxis, insurance products, and other endeavors are distractions from the growing demand woes that are not being addressed, which is a critical worry of ours at this juncture. You think they shouldn't be spending this time on autonomy and, explaining their future fleet of self-driving cars?
That's exactly it. I mean, right now it's about demand. It's about logistics, sales and marketing, stimulating that, making sure that they're cutting costs to what could be a realistic demand factor for Model 3 going forward and what that profitability trajectory looks like. Instead, you're focused on sci-fi novels over the next 4 or 5 years. That's not what the street's focused on. That's why to do an autonomy day 2 days before the earnings, I think that was the first sort of silver bullet where it just shows this company is not focus on what they should be. And right now, there's a feeling that there's no pilot on the plane to navigate, especially with an inexperienced CFO.
Dana, you have been covering Tesla for many, many years. How does the sentiment you're seeing now compare to other eras of Tesla sentiment?
Well, I mean, Tesla is always a roller coaster, right? But I mean, this is more negative than we've seen in quite some time, and that's reflected in the share price. It's reflected in the fact that Tesla hasn't hired any big name executives from the outside in months. The last person they hired, the general counsel, quit after 2 months. This was the first rodeo for Zach Kirkhorn, the new CFO. I think that, analysts are still getting to know him, but people are not hearing back from IR in a timely fashion. There were a lot of unanswered questions on that call.
Meantime, Dan, Elon Musk and the SEC have told a judge they still haven't really reached a settlement. They need more time. Is this a concern for you, this having to do, of course, with Elon's tweeting habits?
It continues to be just a sideshow. It's just another distraction for the company, for investors, where they should be focused on the core issues at hand. And I think this is something you want to be settled sooner rather than later. But in traditional Tesla fashion, continues to kind of elongate. And I think it's a slight overhang on the name, but it speaks to the broader issue here where, I guess the question investors have is, where are the adults in the room?
All right. Question indeed. Dan Ives of Wedbush, you're sticking with me. Bloomberg's Dana Hall, always trying to talk to those adults in the room, the ones who are there. Thank you so much.
My pleasure.
Coming up, concerns continue to swirl that Intel may lose its lucrative stronghold on the market for computer processors. Our conversation with CEO Bob Swan is next. This is Bloomberg. This week, more earnings coming from the big tech giants. Alphabet slated to report Monday, followed with Apple on Tuesday. The iPhone continues to face demand issues, according to Cleveland Research, which followed Wells Fargo in cutting its iPhone unit sales forecasts. But Wedbush is staying optimistic. Still with us, Wedbush analyst Dan Ives. Also joining us, who else but our own Mark Gurman, who covers Apple in LA. So Dan, you're optimistic. Why?
Look, it's forest through the trees. I think the company's gone through, obviously, some dark days, as we see with demand in China. The main thing is we're starting to see demand on iPhones in China tick up. I think you'll see that this quarter. And look, there's no doubt June will be a conservative guide. But given 350 million iPhones that are up for an upgrade over the next 12 to 18 months and the services business, we continue to stay positive here. And I think this is all an install-based story. And that's why the stocks had this parabolic move from the lows over the last few months.
Meantime, Dan, we're still waiting on details, but I just got a headline that Elon Musk has reached a settlement with the SEC. We don't know the details of the settlement yet, but I'll continue to watch for more headlines on that. But does that give you some solace?
Look, I think it's one, as we were talking about, maybe he heard the program, and I think this just speaks to it's one less overhang on the name. Focus on the core business, take the sideshows and the distractions out. So I think if resolved, this is just a little overhang that's now removed from the name that investors don't have to have agita about.
Hey, maybe Elon Musk is listening to the show. You never know. As we wait for more details on that, Mark, when it comes to Apple, we heard that Dan is optimistic, but what is the rest of the analyst and investment community watching for here?
So a lot of people, and I know Dan included, have been really interested and sort of surprised at the stock price's elevation since, Apple announcing its first, year-over-year holiday quarter earnings fall in 18, 19 years. That was a huge deal. That was, a huge negative, yet the stock is up so much since that point. The question really is why? People really seem, or investors and analysts seem really optimistic about Apple's future. And I think even though Apple's services event seemed to be pulled together a bunch of services they're planning to launch over the next 12 months and bring up the release date or the announcement date for one big services, splashy event, I think that worked in some respects. People seem to be optimistic about that.
Now, Dan, I want to drill down into China and what you see happening there, signals you're getting from the supply chain. Do you think, the slowness will continue and that's something Apple is just going to have to adapt to, or could it change?
Look, I think it's a new normal, right? But I mean, in terms of what fell off a cliff in December, we start to see a tick up this quarter, and it comes down to you have 60 to 70 million iPhones in China that are coming out for an upgrade over the next 12 months. And I think the price cuts are starting to help. We expect more price cuts, specifically on 10R over the next 3 months. And I think that could pull forward about 10 to 15 million iPhone units in China. And kind of what Mark's talking about, right here, it's all about an install-based story. Everyone knows iPhone's mature. It's install-based and it's monetizing it. That's why every iPhone they get in China is so key for services and other areas that they need to monetize over the next 3 to 4 years.
So, Mark, what about services? Of course, Tim Cook has been trying to pivot the company and also the messaging around the company, talking about just how big this business is and can be. We saw the streaming announcement this quarter, though there's still a lot of questions about how much that's actually going to contribute to the bottom line, even what they're going to charge for it. But what are you expecting when it comes to the services business?
So let me put it this way, and we've done the math on this recently. An iPhone, the average selling price is somewhere in the $700 to $800 range. The iPhone XS starts at about $1,000. But now Apple has these services that cost about $10 a month. You have Apple Music, you have Apple News Plus, you have the Apple TV Plus service coming up later in the year, you have Apple Arcade, you have iCloud storage, you have the percentage that they're going to get from transactions using the Apple Card, they have Apple Care. So let's say Apple can get the average customer to pay between $30 and $50 a month for services. If you do the math on that, that equates to between the ASP of an iPhone or $1,000 base price of an iPhone XS every 2 years. So even though the iPhone upgrade cycles are slowing, partly because people don't want to pay so much for phones, other reasons include because the phones are lasting longer because they're getting so good components-wise, they're still adding another recurring revenue cycle that's worth as much as an iPhone every 2 years. And I think some analysts and investors are seeing how lucrative that could become long-term for Apple.
So, Dan, what's your thought on the shares? Apple shares have come up from a low in December. In fact, we're seeing most of the big tech stocks rising back up this year. Will that continue?
Oh, yeah. I mean, I continue to think this is one that's going to continue to move higher. The services business, we think, is worth about $400 to $450 billion of revenue. I think it's going to be a ho-hum March quarter on Tuesday after the bell. They'll give a conservative guide for June, but the New York City cab driver knows that, and that's why fundamentally I think this is going to be one that marches higher into the September product cycle. And I think we could see new highs on Apple in the 6 to 9 months, specifically as you get more street cred for the services business and the install base.
All right, Wedbush's Dan Ives, always good to have you, and our very own Mark Gurman, who will be busy next week reporting results. Well, shares of Intel tumbled Friday after the chipmaker cut its full-year revenue outlook. The latest sign, the 2019 rebound in chip stocks may be overdone. Intel CEO Bob Swan spoke to Bloomberg earlier today by phone to discuss the report.
The quarter, we came in a little better than we expected, both on the top line and on the bottom line. But what we saw, some underlying trends in terms of memory pricing, the consumption of the significant amount of purchasing that we saw last week. We're going through a digestion phase with our cloud service providers globally. And then third, as you mentioned, the slowing of growth across the board for our business in China had a real impact. So despite a quarter that was a little better than we expected, as we look forward for the rest of the year, we think we're just going to be more in a digestion phase coming off of an extremely strong 2018. But the end demand of data that consumers and enterprises are looking for, and the compute, storage, and analytics that need to go with that, which bears well for our business, we think is as strong as it's ever been and will continue to be strong in the medium and long term. So our view is the end markets are strong. We're going through a consumption period here in the U.S., but in particular in China as well.
Yes, and we should point out that Intel is up 23% this year, beating the SOX, even beating the S&P 500. I'm curious, though, will orders pick up once customers deplete stockpiles?
That's our expectation. We indicated yesterday that we believe we'll still be going through a digestion period in the first half of the year, but the indications are inventory will in fact be depleted, and the signals we're getting from our customers is they think they'll start buying a little more in the second half of the year. So our expectations are that second half will be a little bit stronger than the first half.
Intel CEO Bob Swan there on Bloomberg earlier. Coming up, tired of waiting 2 whole days for your Amazon Prime order to arrive so long? Well, Amazon's got a new Prime push to try to bolster e-commerce sales. We'll tell you why next. And this Monday kicks off our coverage from the Milken Institute Global Conference. You can tune in all day to Bloomberg Television for interviews with the guests, including Blackstone Group CEO Stephen Schwartzman. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Amazon reported higher than expected profits in its most recent quarter, mostly coming from its focus on cloud computing and digital advertising. But e-commerce saw its lowest revenue growth ever at 10%. So Amazon has decided to try and bolster that business with a new tactic. Here is what CFO Brian Olsavsky revealed on Thursday's investor call.
We're currently working on evolving our Prime free 2-day shipping program to be a free 1-day shipping program. We're able to do this because we've spent 20-plus years expanding our fulfillment and logistics network. But this is still a big investment and a lot of work to do ahead of us.
So it looks like Prime 1-day shipping is coming for U.S. customers. To discuss, we've got Darren Baker, CEO of JumpShot, a company that delivers digital intelligence from the internet's biggest closed platforms. Also with us, Bloomberg Tech Senior Executive Editor Brad Stone. So, Brad, can they pull it off?
Well, look, I mean, Amazon has, 100 fulfillment centers and sortation centers in the U.S. 12 years ago when they announced Prime, maybe it was 5 or 6. And so, not only have they gotten closer to major population centers, they've got vans and trucks and airplanes. It's going to be expensive. Brian said on the call that I think he said it was a $800 million quarterly hit. It's going to hurt margins. But the other thing is that 2-day shipping is kind of old news, right? Walmart does it, eBay does it. Some companies don't even charge for these shipping clubs, and so Amazon is again raising the bar and forcing all those competitors to invest as well.
Now that said, and this is purely anecdotal, when I've needed something fast, I've tried Amazon 1-day shipping, and I feel like 1 out of 2 times it just doesn't come in 1 day, certainly, and I get this note saying your package is taking longer. So, I mean, talk to us about, Darren, the risks of not delivering when you promise this.
Yeah, so what I think this is by Amazon is basically a shot across the bow to the physical retailers, the Walmarts and the Targets that have hundreds of retail locations, have seen a lot of upswing in customers who buy online and then pick up in store. And I think what Amazon is saying is the kinds of products that people care about with 1-day shipping are FMCG products, right? Shampoo, deodorant, paper towels, things like that. And what they're doing is saying, I'm going to take some of this massive war chest, spend $800 million on 1-day shipping, bet that my logistics is going to make this work and force everybody else's hand, right? I mean, this is a pretty interesting move for the other retailers to match.
Now, even though the competition may be catching up, I have this chart here in my Bloomberg, which shows Amazon's market cap compared to Walmart completely dwarfs Walmart. Brad, talk to us about some of the trends we're seeing in the e-commerce business. I mean, why is e-commerce plateauing, growth in the e-commerce business plateauing?
Well, one possible reason of we've reached a point where kind of the growth areas are those things that you need immediately, right? So it's the drugstore items, it's the supermarket items. Amazon's been trying to crack the grocery business for a long time with not a lot of success. The Whole Foods business is somewhat flat. And so, Darren made the point, like moving to next day shipping, it can be a platform to drive further into all those businesses, even healthcare. When you order some even over-the-counter drugs online, you don't necessarily want to wait 2 days if you have a bad cold. And so next day shipping gets them closer to these hard to crack categories.
Now, Darren, you've been drilling down into some of the other trends, including clicks on ads and how that business is doing. What have you seen?
Yeah, so the advertising business, even though it's growing 34% quarter over quarter, what we see is that the percentage of product views that come from a sponsored search, so the effectiveness of their inventory, has pretty much plateaued at about 10%.
So what does that mean?
So the total volume of sponsored searches is still going through the roof, right? It's 40% up quarter over quarter. What Amazon's going to have to do is they're going to have to invent new products. They're going to have to come up with video ads to compete with Facebook. They're going to have to watch out for competition. Walmart, that same 10% stat on Amazon is 1.5% on Walmart. Walmart's out buying ad tech companies. They're taking digital ad sales in-house. So I think that advertising business is one that Amazon's going to have to pay a lot of attention to on the innovation side.
Brad, we've talked about how Amazon is sort of behind Google and Facebook, but could be catching up in terms of the digital ad business. Are you optimistic about its advertising business, given how big the other businesses are?
Obviously, there's a big opportunity there, but it's never quite been in Amazon's DNA, right, to put a video ad on the site or to put a banner ad on the site. They've had this remarkable growth in the ad business, almost in spite of itself, right? Finding ways to insert ads into search and onto product listing pages. So I think the opportunity is there, and kind of the biggest challenge is whether they really want to do that, because they're famously, customer-centric company. Customers don't really want to see a good ad. Yes, you can rationalize that it leads to a better search product, but it can oftentimes be a distraction and a worse user experience. So Amazon's going to really have to go for it and maybe sacrifice some of its values.
Now, Darren, I wonder, how long is it going to take for other retailers to catch up, for delivery services like UPS and FedEx to catch up? And then what will Amazon's edge be?
Well, I think Amazon's got an edge. I mean, they are a logistics company in a lot of ways, just as much as a technology company. So I think they've got a good edge if they can execute against this one-day shipping. And then I think, as Brad mentioned, if they choose to get serious about advertising, or more serious than they've been, I think they've got a big opportunity. I just think they have to decide at the end of the day, are they a marketplace? Are they an advertising company? Are they a little bit of everything?
Well, and they're going to invest $800 million to push down these delivery times, Brad. Is that going to cut into the bottom line?
Oh, absolutely. I mean, and they warned on the call that it compresses margins. One thing they can do, though, is, you can assure that everything is delivered in a day, or you can only show customers a selection of products that apply for Prime shipping. And so, they can kind of gradually move products into and out of the Prime window, and I suspect they'll do that and really manage their costs over the years ahead.
All right, Brad Stone, our senior executive editor, Darren Baker, CEO of JumpShot. Thank you both.
Thank you.
Could there be a bustling economy on the moon in just a few decades? One startup thinks so. As part of Bloomberg's Next Job series, Aki Ito meets an engineer at a Japanese startup working to make that vision a reality.
On the moon, where the sun's shining, it's blindingly bright. Where it isn't, it's pitch black. The surface is covered in the finest particles of sand. It's a tricky environment for even the most advanced machines to navigate. And before fleets of these things start roaming the real moon, this engineer has many late nights ahead. Perfecting this rover and testing it on an artificial landscape like this one will get us one step closer to establishing the first human settlement away from Earth.
Discovery, Roger. Go for deploy.
One day, when you and I make it up to the moon, it could be thanks to her.
My name is Akane Imamura, and I built miniature lunar rover. iSpace では、月の水を見つけて、それを使って新しい経済圏を月に作ろうというところで、ローバーの開発やランダーの開発をしています。
それがムーンバレーなんですね。
あ、そうですね。
When you think of a space rover, you might think of the moon buggy, used in 3 of the Apollo missions.
There's the big craters there, though, aren't they?
Or the Opportunity rover that looked for water on Mars. Next to these 2 hulking creations from previous decades, iSpace's machine is so small, it looks like a toy. Akane's team is racing against their deadline of 2021, when a SpaceX rocket will blast iSpace's lander, carrying 2 rovers, into orbit around the moon. After a soft landing, each rover will roll out and roam the lunar landscape, sending images, video, and mapping data back to Earth. The Japan Aerospace Exploration Agency, known as JAXA. Here on Earth, this is the closest thing to the moon.
Akari 消してもらえますか？つけてください。この光の具合も月面の状態を模擬しています。どんな風にセンサーやカメラがそのイメージを作り出すかというのはやはりここの施設でしか再現できないのでとても貴重な機会です。
なんか月の月面ってこんな感じなんですか？
はい。もうちょっとこうふわっと片栗粉を混ぜたようなイメージっていうのを聞いたことがあります。
And after a few final preparations, they started the tests.
お願いします。
Up first was a series of 10-meter crawls along flat ground.
もうちょっと。
With every run, Akane's team reconfigured the rover to have a different weight distribution. The plan was to see which versions would be able to run straight
あ、OK です。
and measure how much the rogue ones would veer off path.
だいぶずれてきました。ストップ。
And then it was the hardest part of the day. The lunar hill climbs. And with a chance to play a very tiny role in establishing humanity's presence on the moon, I couldn't resist.
アキさんに打ってもらいたいのは、まっすぐ動くコマンドを打ってもらいたいです。じゃあちょっとやってみてください。
ローバー頑張ってますね。
頑張ってます今。かなり坂道がすごく滑りやすくて、わだちを見ると分かるんですけど、空回りしてるのがよく。はい、ストップ。
できました。Dear future lunar residents and lunar tourists, you're welcome.
Bloomberg's Aki Ito reporting there. Coming up, millennials and Gen Z may both be digital natives, but the way they interact with stores is quite different. How one mobile shopping app, Dote, is tapping into Gen Z's wallet next. While retailers and marketers have worked hard to tailor to the millennial audience, it might be time to focus on the next generation, Gen Z, the group of kids and young adults between 7 and 22. This is making me feel really old. Is expected to have an estimated $143 billion in spending power, according to a report by Barclay. And one mobile shopping app, Dote, is tapping into that market. Designed specifically for Gen Z shoppers, Dote allows users to connect and shop more than 150 brands, including Urban Outfitters and Forever 21, from one app. To date, it's raised over $23 million in funding, and it is in the latest edition of our Retail Transformed series. We're joined now by Dote founder and CEO, Lauren Farley. Lauren, welcome.
Thank you for having me.
So aside from being here to make me feel old, tell me a little bit more about the app and how it works.
Absolutely. So Dote is a social commerce app for Gen Z. We have 3.2 million users, and I really started Dote out of my own frustration trying to shop from my phone. I actually grew up in Alaska, so didn't have access to very many stores or malls, was a really early e-commerce shopper. Ended up moving out to the Bay Area, working in mobile games, and got to see that market move from being desktop-based to mobile, create really big businesses and really fun interactive experiences. I knew the same thing would happen with shopping, and that games are usually early on new platforms and with new technologies, but didn't see anything out there doing it, so decided to make a move.
So are there aspects of gaming built into this platform?
Absolutely, yeah. We leverage a lot of gamification mechanics, and then most recently we launched Shopping Party, which is a brand new feature that some are calling the Twitch for shopping. It's a live streaming shopping experience that allows the influencers on the platform to shop live with their audience on Dote.
Now, social commerce really hasn't taken off. I mean, it sounds great, but there's really no good way for me to buy what my friends are buying. I can see what they like on Pinterest. Instagram has been experimenting, but is this really possible?
Yeah, I think it absolutely is really possible, and the time is really now. I think Gen Z is shopping fundamentally different than kind of generations before. First of all, they're mobile and they want to do everything they can do from their phones. And then second of all, they're social, and their celebrities and the people driving their purchase decisions are really these social stars, YouTubers and Instagrammers. And so with Dote, we bring those together and allow you to collaborate and shop together. And really taking, I think, a lot of what we lost when we moved online back into the shopping experience in terms of interaction and socializing.
So what's the business model? How do you make money?
Absolutely. So we make money in two ways. Primarily, we take a cut from our retailer partners for every transaction generated on the platform. And then at the end of last year, we actually launched a private label with a big YouTuber named Emma Chamberlain, and that was a rev share, so we earned revenue from that as well.
How much traffic are you driving?
From a traffic perspective, we don't necessarily disclose that, but we do have 3.2 million users on the platform.
Now, you were on Apple's original show, Planet of the Apps. Gwyneth Paltrow was a judge, and apparently she's been an advisor to you, and she's stayed involved with the company. Tell me about that. There you are with Gwyneth Paltrow.
Absolutely. Yeah, I think what Gwyneth has done with Goop has really been about storytelling and commerce kind of built around a person, and that's not that different than what Dote is doing with these YouTubers and these Instagram stars. We call it commerce around a person, and Gwyneth has been instrumental in helping us kind of develop that thesis.
So what sort of advice has she given you?
Oh my gosh, she has given me advice from what products to use to just how to think about storytelling. Honestly, she comes from that storytelling background, and I think that especially here in the Valley, you know, we're so metric driven, and of course we are at Dote as well, but really also thinking about the emotion and sort of the aspiration behind these purchasing decisions.
So who do you think of as your competition? Is it Instagram?
It's a great question. I think, you know, recent moves by these big players into the mobile commerce space has been really validating for us. You know, I founded the company in 2014, so certainly I have believed that this is a big market, but I think that the way those folks are approaching it is a much more kind of business first, how do we make our purchase funnel easier, you know, with our ads business. But for Dote, it's really about building a shopping experience and a social community on the phone around shopping.
So what's next?
What's next? Well, lots of stuff to come, I think, and continuing to invest in social as well as more of these private labels with influencer partners.
All right, Dote founder and CEO Lauren Farley, thank you so much.
Thank you
for stopping by. Coming up, as Google employees continue to protest the company's sexual harassment policies, the company also rolling out new policies designed to help them speak out. But unrest at the tech giant continues. We'll discuss next. This is Bloomberg. As we mentioned earlier in the hour, Elon Musk and the U.S. SEC are settling a legal dispute over his tweets. As part of the deal, the Tesla CEO needs clearance from a lawyer before making future posts on social media. And there are several topics that fall under the umbrella that needs approval, including details of sales numbers and production at the car maker. The settlement avoids a decision by the judge on whether Musk should be held in contempt. However, Musk still faces more legal headaches. A judge refused to dismiss a lawsuit brought on by a British cave rescuer who took offense to being called a pedo guy after he had criticized Musk's mini submarine. Well, several months after thousands of employees walked out of Google, the search engine unveiled another round of policy changes to address employee concerns about misconduct. Staff can now lodge complaints and concerns through a website. And there's a program to provide better care for employees during and after investigations. Joining us now to discuss, Bloomberg Tech's Mark Birkin. So what are these new policy changes?
So I think, this is Google addressing a pretty squeaky wheel. They've had employees since the walkout, even before, arguing about or protesting employee policies around mandatory arbitration, around military work, around their work in China. This is an attempt to give them a channel to feel like they can address these internally rather than taking it outside the company.
Where they can complain about anything.
Right. I mean, the backdrop here is happening. We saw earlier on Monday, Wired broke the story that there were two of the leaders of the walkout wrote an internal email to the company saying that they had been retaliated against. One of them worked for YouTube, said she was asked to take a sick leave. Another one was told to step away from her AI ethics work. These are pretty significant leaders inside this vocal minority in the company that has been active, arguably ending their military contract, arguably ending a lot of their search work in China, and prompting thousands of employees to walk out of their jobs.
Now, Google has previously said about the walkout, we prohibit retaliation in the workplace and investigate all allegations. Employees and teams are regularly and commonly given new assignments or reorganized to keep pace with evolving business needs. There's been no retaliation here. So they're denying that they've retaliated.
They are denying that. Today, just now, Google employees held what they call a retaliation town hall to collect more stories about this. We reported late last night there's been a case filed with the National Labor Review Board claiming around workplace organizing that Google had retaliated. We don't know who filed it.
That Google violated federal law.
Correct. So this is moving and escalating pretty quickly into an issue that may happen. And now that Google removed the mandatory arbitration clause, this is something that isn't necessarily going to be settled behind closed doors.
Now, you speak to a lot of Google employees. Is this feeling widely held, this concern widely held? I speak to a lot of Google employees, and I feel like I hear this a lot. I also hear Google is a great place to work.
Yeah, I mean, it's 100,000 people at this point. And that's,
they don't all feel the same way,
yeah,
of course.
and then you have the contractors, which are even more. I think it's certainly I would say, great, it's not everyone there. Google is, like, in many ways, a nation state. It is broad, it's international. There are issues, and that's been the problem for the company management, right, is that they have traditionally been able to sort of have this sort of transparent and a lot of debates inside the company. And you talk to people that worked on HR, you said they used to have all these robust debates, but they stayed inside the confines of the company. And now they're spilling out in these new ways. And part of it is the Trump era we're living in. Part of it is around these debates about AI ethics. And part of it, I think, is how the leadership has handled these internal flare-ups.
How is it impacting their work internally? I mean, is this new sort of era of unrest impacting the day-to-day?
Yeah, I mean, Google reports earnings on Monday. Good chance that it's probably not going to impact their search ad business. I think the biggest impact, and we haven't really seen it, is in cloud. This is a business where one of the largest cloud buyers is the federal government, is some work in China. This is two areas that we've reported on Google's interest in China. They clearly have an interest in continuing a relationship with the government. Those are two areas. If you look at Saudi Arabia as another big potential market, there's a lot of conflict ahead, the oil and gas industry. So it's unclear. I think there will be some impact.
All right, Bloomberg's Mark Birkin. You'll be all over Alphabet earnings next week. So talk to you then. That does it for this edition of Bloomberg Technology. On Monday, I will be anchoring the show from Washington and speaking to Republican Senator Marsha Blackburn of Tennessee, talking about regulation and the role of tech in politics. Have a wonderful weekend, everyone. This is Bloomberg.